An analyst goes on TV and actually makes sense about Tesla stock. Let's take a look.
Let's bring in Tesla Bull, Gene Munster, managing partner at Deepwater Asset Management. Gene, great to have you with us. How excited are you, if at all, about this, Tesla Model 2 or whatever you want to call it, this lowest end car that could be unveiled soon?
Scale 1 to 10, 9.5. This is a measurable outcome, a measurable development.
I guess the excitement is also measurable.
We knew it's coming. We don't know the timing of it, but just to kind of put the context of the conversation, and ultimately this is about selling units. It's about deliveries. And to increase deliveries, you need to increase your product line. They really have two products right now, Model Y, Model 3. They announced today that Model Y is the best-selling non-pickup truck in the U.S. Non-pickup truck means pickups sell more than the Model Y. That's the F-150.
Give it some more time, and I believe that the Model Y is going to beat all of these vehicles in the US as well. And if for some reason that does not happen, the next generation vehicle will do it. Either way, this year the Model Y will be the world's best-selling car.
And I think there's an opportunity for Tesla, if you just take the step back here. Cybertruck's going to be coming out next year. That could be a nothing. It could be a grand slam. And then you put on that a lower priced vehicle that you're talking about. And then there's this other vehicle. I'm going to guess that it's probably something like a kind of a van, a Sprinter, like a Mercedes Sprinter like type of vehicle. Smaller market than the Model Y, but still kind of fills in this product gap. And
probably really high margin too.
They don't update their products very often, as they're very different than a typical car maker. So I'm optimistic about the long term here based on what's going to be more models coming out. And it's, yes, we're in a storm around the economy right now. But as soon as these products start coming out, I suspect investor optimism related to Tesla is going to shift to being more positive.
That was recorded a few days ago when the stock was at $166. Now we are at $180. It doesn't seem like it took long for investors to become a little bit more optimistic. And if you look at countries in Europe that report sales daily, we can see that this quarter Tesla is way ahead of the previous quarter, and the previous quarter for these daily reporting countries was really, really good. So Tesla is doing better than really, really good. Of course, these are relatively small countries, and the big countries, that's really where everything is decided for Tesla in Europe. But unless these bigger countries do even worse than the previous quarter, it looks like Europe is going to do pretty well this time, because even if only these smaller countries do much better, I mean, look at these numbers, these do add up if we beat this previous quarter. However, Troy, who is pretty good at estimating what the deliveries are going to be, he sounds caution. Not only is he saying that the sales in Germany are weak, he's actually also saying that we are currently trending below the sales of Q1 in Europe. However, James says that in Europe we are trending for over 100,000 deliveries. Sometimes it can be a little bit hard to know exactly what's going on because it looks like it's going one day and then sometimes Tesla just turns last second and makes it. Whatever happens in the next few quarters does not really matter that much because the next generation vehicle will obliterate all of the competition. Actually, I should say next generation vehicles.
Should we think about Tesla now as growth at all costs? I mean, is that the right sort of way that we're looking at it? Because that's what it sounds like, that whatever products they have, they don't really care about the profitability. They don't care about the margin. They want to get the units out there. That's what you made it sound like too.
Yeah, I think Dan was mentioning that earlier on. I agree with that. I think that this is growth at all costs. This is not just an EV story. It's not just a Model 3 and Y. We talked about the other two products that are coming out. They led their investor commentary today to talk about Master Plan 3. There's going to be HVAC. That's a new product. Obviously, FSD, more solar products. And then he said optimist, and this is the kind of the eye-rolling comment. I think the head of the eye-rolling comment is that long-term optimists will create more value, be more of the valuation of Tesla. Obviously, this robotic that is just in its infancy right now. But all of those, when you put this whole piece together, what this is, it's growth. I mean, each of these products are going after big addressable markets.
This is one huge reason why I am so invested in Tesla stock, because just the EV business alone justifies the current valuation and actually makes it undervalued still just with EVs, and there's so much growth that remains just with EVs alone. I mean, Tesla has not even delivered 2 million vehicles in a year, and Tesla will deliver 5 million, then 10, and then 15, and then I believe 20 million vehicles as well. And that's just EVs. Then you add all other things on top of this. FSD, Dojo potentially, solar panels, the energy storage business, and then the bot. There's so much potential still. And the downside, in my personal opinion, is relatively low. But if I put my money into S&P 500, which is my second favorite stock investment, which right now I don't own because I'm all in Tesla. If I put my money there, I'm not going to double my money really in a year or 10x my money in 10 years. That just does not happen. I can say that almost with 100% certainty. And the downside, we know relatively speaking what the downside could be, but with Tesla, I believe a downside is somewhat similar. So if a downside is somewhat similar, but the upside is a whole lot bigger, why would I put a whole lot of money in S&P 500 and not into Tesla? That's my logic. Of course, the risk of investing into S&P 500, I think, is lower, but in relative terms, when you compare the risk to return ratio, I think Tesla stock is a much better deal. For me personally, it is.
And I would just put that up against, and when the debate about investing in this is that put that line up, even if 2 or 3 of those hit, put that line up against any other car makers, and I think that Tesla still stands above the rest when it comes to growth opportunities. It's going to be bumpy, but they're going after such big markets, and they got such a good lead. I suspect that the momentum is going to shift more positively in the quarters ahead.
With Elon promising to spend more time on Tesla, I think that is already happening. And the moment the next generation vehicle comes out, I think that's when the paradigm shift could really happen. And then throw FSD on top of that. Eventually, Tesla will have its own ChatGPT-like moment.
Gene, do you think the market has become too fixated on that margin of 20% because they're so far ahead of the competition? Do you think that's where we should be fixated on the fact that even if it drops to 15%, they're still going to be way ahead of the other car makers? I think I know your answer, but why do you think the market attached itself to 20?
Markets typically looks 2-3 years out. In the case of Tesla, it's been looking the 1 quarter, 2 quarters out, focused on that number.
He's basically saying that the stock market doesn't really understand Tesla.
If that number goes down, let's say it goes that 15% number, the stock's going to go down. I'm going to be wrong in the near term. But I think that eventually, I think what really separates, and this is what we do at Deepwater, is look for persistent growth. These are companies that grow longer for faster. And I think what really the opportunity around Tesla is to lean into whatever the margin is, if it's 8%, if it's 2%. But if they start capturing some of these markets, they are large, and large is an understatement.
Of course, we expect problems, but Tesla dodges problems, although it comes really close. But if there's one thing that Elon Musk is really good at, it is facing the problem and then dodging it, just by this much.
And I think that eventually the profitability is going to swing back. And they've shown they can do that in electric vehicles. I think they can do it in energy capture. And eventually, long shot here, but eventually around Optimus and robotics.
It also depends on advertising and how much money Tesla wants to spend on ads. If Tesla really nails the advertising game, then the margins could really explode. The stock market certainly likes huge margins, so if Tesla nails that, then the stock price will probably shoot straight up. Lately, Elon Musk has been doing quite a few interviews, and it looks like he has done another one with the Babylon Bee. Last year, the Babylon Bee reported that Elon Musk backed out of a Twitter deal after realizing he can read the Babylon Bee by going directly to their website. Anyway, do you think that Elon Musk doing some interviews helps Tesla sell more vehicles? I think it does. This is from LinkedIn, and he appears to be a Tesla engineer. He's looking for people to help him automate wire harness installation in cars. That's just another way how Tesla is possibly going to save money on costs. In this video, I share my thoughts about Tesla starting to advertise. My name is Matt. Please like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching. This summarizes perfectly how legacy automakers are transitioning to EVs. They try, They make a few, and then they don't like the transition. They try to find ways to go back.